Hello traders, Gary Wagner here, approximately 2 o'clock in Honolulu, 7 o'clock in New York on Wednesday, 3rd day of January 2024, and this is the Daily Report for Gold and Silver. I do want to apologize for filming this a little bit later than usual, but hopefully it will be well worth the wait. Gold declined by approximately $30.60 by the time Globex was finished trading prior to the market opening in Australia. Once open in Australia, we saw a pretty dramatic recoup. Gold is currently up $7.10 from the close in Globex and fixed at $2,049. We have been waiting for a dip to strategically enter a long position at the best possible value. I was hoping to get in anywhere between 2030 and 2040, as I mentioned last week, as well as in yesterday's market outlook. Nonetheless, this might be the opportunity. This might be as deep of a dip as we get. That being said, as always, I will send out a trade alert via SMS text message as well as email when we are ready to pull the trigger. First, the setup for our current pricing. We are using an extremely long-term chart. Each candle represents 1 month, and it has an extremely long Elliott wave count, what we call a super cycle. Super cycle waves tend to last decades in length and occur and complete over a 50-year or more period. As we talked about in Outlook 2024, I believe that wave 1 began in around 76, completed in 80. From 80 to 99, we had a multi-decade decline. Then we went into the extremely long impulse wave 3, where we saw gold prices rise from approximately 300 to the first of a couple of new all-time highs, just at $1,900 per ounce, the middle of 2011. That was exceedingly short-lived. It lasted about 2 days, and from there we had roughly a year and a half to 2 years in which we traded to 1555 on the low and 1800 on the high. That was until it broke hard. When it did break hard, it ended up trading to a low of just above 1000. That began our final and fifth major wave of this super cycle. I believe we are still in that fifth wave, and that brings us up to date to look at a daily chart. As you know, within Elliott wave, each wave can be broken into a fractal of that wave. A impulse wave 1 will typically have a 5 count within it, 1, 2, 3, 4, 5. And what we are looking at is after a strong decline from the highs of May 2023, well above $2,000 per ounce, we saw gold decline to approximately $1,850. From there, I am restarting a wave count, this being a fractal of the major and intermediate. I believe we completed wave 1, wave 2, wave 3 is right here, wave 4, and we are now in the fifth wave, 5 of 5 of this fractal count. It began roughly at 1988, but this recent dip, I believe, is still part of that fifth wave. We will go into a third. I'm leaving this unmarked because we have to calculate where 3 will complete. That being said, now that we are trading above this low and it occurs at a important Fibonacci retracement level, 23.6, and the retracement data set starts during the October rally and concludes at the all-time record high here. Strategically, if this low that occurred today in trading holds, it will be appropriate to enter our first long trade of the year. However, because of the fact that it is 7:30 in New York, I'm hesitant to send out a trade alert now. Rather, I would like to send it out prior to the opening in New York. My hope is that it holds this area. That will give us enough time to see if it does back off and make a lower low. If that's the case, we will want to hold. But if it firms in this area, trades a little bit higher or even here, it's a very low risk trade. One of the factors needed for us to see a strong gold rally after a few days of decline would be a return to dollar weakness. We can see that the dollar has increased in value for the last 4 consecutive days, but I draw your attention to the recent high and, more importantly, close, because it occurs exactly at the 61.8% fib retracement. The data set that we use is from 99 up to 107, so it's a large data set. This is a logical spot to look for resistance and a return to dollar weakness. Lastly, a look at silver. An incredibly strong decline today. I believe it was 3.32%. It took silver to a low of $23.05. It has recovered even off of the low, currently at 23.18. In terms of issuing a buy signal for silver, I like the area that it found support. Again, the 61.8% retracement. However, I'm going to be a little bit slower to act because with silver, I want to see a strong confirmation that we have indeed seen a pivot or key reversal off of these lows to higher pricing. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.